opportunities for long-term growth and stability, we will be diving into how insurance can go beyond its traditional role of protection and become a vital component of a wealth-building strategy. Throughout this session today, we will hear from some of the best minds in the field who will share real-life examples and practical strategies. We will explore how products like our coronation annuities, our endowment products, our investment-linked plans can play very critical roles in securing and growing your wealth. Whether you're just beginning your investment journey or you have several years of experience, I'm extremely confident that you will leave this session with valuable insights that will guide your financial decisions. Once again, I thank you for being here and for dedicating your time to learn about the powerful financial opportunities available to you through insurance. We are excited to have you with us and we look forward to an engaging and enriching session this morning. I am Adibo Ali Adeshono. I'm the Managing Director of Coronation Life Assurance Limited. Thank you once again.
Thank you so much, Debo. Thank you so much for your wonderful welcome address. Just as you have said at the end, we hope that whether you're an expert already in investments, whether you're a beginner, you would leave with valuable knowledge that you will take and you have actionable steps, even as we go into the new year, to say, this is what I want to start doing in terms of investment. Just to be sure that we have our attendees are live. We don't forget that if you're just joining, you can drop your questions on the Q&A section. And of course, we will take your questions in due time. We'll go straight into the welcome, the keynotes presentation by our keynote speaker, who has prepared very well. I'll just introduce her briefly. Our keynote speaker, as you may have seen from the invitations today, is Professor Folake Fiyisayo Olowo-Kudejo. She's a professor at the University of Lagos, which she attended also, where she obtained her BSc degree in insurance and a Master of Business Administration, MBA, and also a Master of Science in Marketing. She proceeded also to Lagos State University, where she earned her PhD in Business Administration. She's well grounded in the field of Actuarial Science and Insurance. She is a professor in the Department of Actuarial Science and Insurance at the Faculty of Management Sciences. And as well, she is the Director of Executive Master of Business Administration, the EMBA program at the University of Lagos. Her experience spans over 25 years of teaching, research, curriculum development, consultancy, and community service. She has attended several local and international conferences and published widely in international learned and high-impact journals. She is a fellow of the Association of Enterprise Risk Management Professionals, the fellow of the Chartered Institute of Loan and Risk Management. She's a fellow of the Chartered Risk Management Institute, as well as a fellow Chartered Institute of Certified Business Consultants, Canada. She's also a fellow of the Certified Business Consultants, Nigeria, and a member of several other professional bodies. She's a National Staff Advisor, ISEC Nigeria, and also serves as an examiner to many professional bodies, including the CIBN, which is the Chartered Institute of Bankers of Nigeria, and an external examiner to the Department of Insurance, Lagos State University, Ojo, Lagos, Nigeria. She is, well-grounded in academia and in the business world, and we think that no other person would have been better suited to give us the keynote presentation for this webinar, Smart Investing, how we can best leverage insurance solution for wealth accumulation, than Professor Folake Olowo-Kudejo. Please, let's welcome her as she comes up to take her welcome address. Good morning, Professor.
Good morning. Thank you for having me.
Please go ahead to share your screen. Yes. Stop.
Hosts, please allow me to share.
You can go ahead now, Prof.
Okay. So good morning, everyone. And this morning we'll be talking about smart investing, leveraging insurance solutions for wealth accumulation. When you talk of smart investing, host. Essentially, we're talking about in the financial security and you see, wealth accumulation is in the heart of many people. Wealth accumulation is very important and is at the heart of the business. It is the heart cry of many people. And okay, I can share now. Thank you, host. Yeah, so financial security and wealth accumulation is the heart cry of many individuals. You see, at every turn that we get to, we have things to do. As individuals, as a family, as corporate bodies, there are always challenges. There are bills to pay. You talk of rent, either rent or acquiring a building, children's school fees, fuel, electricity, band A. So there's a lot to be done with money. So there's a need to secure and to grow wealth, to secure whatever you have and then to grow wealth. So the need to do that cannot be overemphasized. Actually, particularly in Nigeria, in an economy like ours that is grappling with inflation, and incessant devaluation of the naira, it becomes very important. You have to understand what financial security is. Because these days, you find out that the traditional savings that we know is not enough. It is not sufficient guarantee for wealth accumulation anymore. So there is a need for you to do a little more. So what little more can you do? This is what brings about the thought of smart investment. What is smart? The dictionary meaning of smart says it's being proactive, it's being sharp, efficient, effective. It means that somebody is able to achieve within record time or within a specified time an objective that has been set out. But then Duran in 1981 is one of the fathers of management, of business management. He came out with SMART as an acronym. That SMART goes beyond just the dictionary definition, which says what we wanted to say, being able to achieve set goals within record time. But SMART also in business management is seen as acronym S, where S stands for specific, M stands for measurable, A for achievable, R for relevant, and then T for time bound. Specific, as in, what are we talking about? It entails defining exactly what you want to attain, what you want to achieve. That is, what is the objective? What is the objective of this investment? Why am I investing? So it takes out clearly the objective of what you want to achieve, of the goals that are to be attained. It should be measurable. That is, you should be able to track and quantify progress towards the goal. You have set goals. So it's either you are making progress or you are not making any progress. So you should have a system in place that will be able to measure whether you are achieving, whether you are going towards achieving what you have set out to do. So the goal should have clear criteria for measuring. If you don't have clear criteria for measuring, then it becomes difficult for you to measure. It must, usually we use numbers, data. There should be specific indicators that you are using. Then it should be achievable. The A for SMART stands for achievable. That is, it must be realistic. It must be something that you can accomplish, that it fits into what you have the power to accomplish, that is achievable by you. You know your salary, you know your skills, you know your total income, you know the areas where you can borrow money from wherever money can come from. No. So you cannot just wake up this morning and say, I need 10 billion naira before nightfall. Where's the money coming from? So it should be something that is, if you don't set achievable goals, you are just setting yourself up for frustration. So you should say that, okay, maybe at 25, I am investing 5 million naira. By the time I'm 50 years old, I expect that my investment will have grown to 500 million, whatever. Set a goal for yourself. But a goal that is achievable, then you know that, okay, this is how I want to go towards that goal. This is how I'm going to achieve the goal. Then it should be relevant. That is, the goals fit properly into your life for now. That the goals fit properly into what you are doing. The goal, what you are talking about, what you are hoping to achieve, that it goes into your long-term aspirations that you have as a person, and that it aligns with your objective. And so your priorities that you set is a function of where am I going. So you prioritize. Then time bound. This means setting clear timelines. I talked about I am 25 now. By the time I'm 50, I want to achieve this. By the time I'm 35, that is in 10 years, I want to be able to achieve. So set clear timelines. Set deadlines for you to be able to achieve what you have in mind. That's why you're able to track effectively your goals. You know, so when you have money, there are three options. Three options come up. Is either, they bring up three options, is either spend it, save it, or invest it. Those are the three things you can do if you have money. Spend it, save it, or invest it. When you spend it, it means that you blow it. Okay, you are using what you have, the financial resources at your disposal now. You are using it to buy what you need. So you are using it to fulfill your needs and your wants in this present time. There's nothing wrong with that. That's what you want to do, and that is what you have done. But if you don't spend it, you have the option of saving it or investing it. When you save, it means that you are setting the money aside in a relatively low risk, safe, interest-paying accounts, so that you know that your money is there when it is needed. You are keeping it safe. Your money is there when it's needed. But investment is a little different from this. In investing, you are taking some risk. So it's not just putting your money in a low risk, safe area, relatively low risk that I'm sure my money is there. In investing, you are taking calculated risk. Remember, I said the word calculated. Calculated risk, and you hope to earn more with that money. The aim is that you want to increase your wealth over time through capital appreciation, dividends, or through interest. But you want to grow the money. You see, what like a tree grows from a tiny seed? Where the first dollar seed is the seed from which the tree of wealth grows. It is, I have a picture of a mustard seed and a mustard tree somewhere, where as small as a mustard seed is, you plant it, and then it grows into that big tree that gives people, it has many uses, including shelter. This statement, it's credited to Orison Swetmadin, the author of the Success magazine in the US. So from the first seed that you plant, from the first dollar that you put down, then you expect it to grow, to germinate, and give you something big. Your investment towards wealth accumulation is a way, is the synchronous to financial freedom. You are well on your way to financial freedom if you invest well. And when do you start investing? Today. You should have started investing before, but if you have not started investing, then there's no better time than now. Let's talk about saving and investing so that you don't think it's the same thing. You see, investing is a process of efficiently managing your money with the hope of receiving more money or more returns in the future. While saving means you are sacrificing consumption today. Yes, you are not blowing it, you're not spending the money, but you are sacrificing consumption today with the hope of consuming in the future. Okay, instead of me spending that money now, I'll wait till next, I'll put it in a safe place, then wait till next year, then use it to buy that thing instead of using it now. So when you want to invest, there are some questions you want to ask yourself. Where to invest? Then where do you invest your money? What do you invest into? What are your goals? Now we talked about goals. What are your goals for investing? And what are the possible constraints and risks involved in the choice of investment? That is very important. What are the risks that I'm going to face? Because there are several options available to you if you want to invest. I give some examples. Investment opportunities that you can have, you can invest in stocks or equity, which means you get ownership in some companies, or maybe venture capital, bonds, which means lending money for either the corporate bodies or the government for a fixed interest. You can put your money in savings or get certificate of deposit, put in a fixed deposit where you know that, okay, this is the percentage that I get every year or every 3 months or every 9 months, depending. You can do Forex trading, which is trading in currency, in foreign currencies. Real estate too is there, where you buy land or buy houses, investing in physical properties. And then there are other ones like commodities, investing in commodities. You have natural resources like gold, silver, or agri commodities, the cocoa, the groundnut, the cashew nuts. You can invest in agri, you can invest in commodities, you can invest in precious metals like the palladium, like the rhodium, and then the cryptocurrency, which is very popular now, or collectibles. Collectibles is not much favored around here in this part of the world, but then it's very popular and very favored in some other parts. Collectibles like arts, like antiques, like coins, wine, to be resold later or for some other values that it gives you. But each of these risks, each of these investment opportunities, they come with their own risk. They all have risk that are attached to them. You see, risk is everywhere. Every decision you take comes with its own attendant risk. How bad, how serious is this risk is what we're talking about. I have taken the pains to look at some risk that you encounter. You have market risk, you have company-specific risk, investment-specific risk, regulatory risk, and there are other risks like inflation, currency risk, geographical risk, political risk, cybersecurity risk. I don't think I need to go into this so that we don't take too much time. But these are risks that are brought about when you invest, when you take investment decisions. Policy changes, government will change policy like that. Okay, you want to invest in importing some materials, maybe rice. Christmas is around the corner. I want to invest in bringing that in imports. Before you send your money to where you are importing from, before it lands, government have said, and that is because they said, okay, because you think that okay, to favor you coming in, but before you come, they have banned it or some other reasons. So there are reasons where government policies may not favor you. And there's so many other, the timing, it may be wrong timing. You may be buying at a time that is wrong, and by the time you want to sell, it has dropped. Undervaluation, you didn't know it would cost so high. For one reason or the other, you are undervaluing your assets, and so you are selling too cheaply, and many others like that. Using smart criteria. I'm sorry. Using smart criteria allows investors to structure their efforts efficiently. You have defined goals. Your defined goals prevents you from wasting your resources. Smart is important. You have to think smartly. You have to invest smartly. But investment markets are mostly unpredictable and highly volatile. So it does not matter how well, how smart you go about those things. There are some things that are beyond your control. That is just the nature of investment markets. They are unpredictable and volatile. Insurance, on the other hand, is a risk management enterprise and can be used to leverage on certain investment and ensure the fulfillment of financial goals for the investors. The whole essence of insurance is risk management. Insurance is about risk management. So insurance, at the core of all the things that we do, is managing that risk. So investment market being volatile, investment market being unpredictable, they have all been taken into consideration by insurance because that is what we do. That's just the nature of insurance. So what are the solutions you can find to wealth accumulation? In order to effectively hedge against inflationary pressures and currency risk, which is one of the associated risks in investment, to avoid the pitfalls and volatile markets and inflation, in order to build a resilient financial foundation and to position your business to thrive despite the hard economy that we find ourselves, and have peace of mind that comes from efficient money management, then insurance is the answer. Insurance has innovative strategies that can help secure and grow wealth despite economic uncertainties. Insurance and wealth accumulation. We have indemnity policies and we have policies that are not indemnity policies, like insurance. A major principle of insurance is to indemnify, to bring the insured back to the same financial position that he occupied immediately before the loss. That is what insurance does. So I would say insurance is the only business that exists for the purpose of other business. Because of the existence of insurance, the business mind is free to invest. If insurance does not exist, and he knows that if there's an unfortunate incident, that is business that is investing in it will be swept under. He is not free to invest. And if he invests, he's not able to invest all because he wants to keep something aside. But then because he knows that there is insurance, and because of insurance, he can rest easy, then the entrepreneur, the businessman is able to insure freely. And when there is an unfortunate incident, then insurance comes and then make good the loss. So I'll say all classes of insurance, ranging from motor to property to liability, all classes of insurance, they contribute to wealth accumulation and to wealth retention. They help you to invest in business, which helps you to make money and accumulate wealth. And then it doesn't fritter away because it helps to protect you. So every form of insurance contributes to wealth accumulation and then retention. And then we have life products. In fact, more and more people have started realizing that life insurance tools, life insurance products are becoming important tools for securing families against financial loss and for wealth accumulation. And we have an array of this in Coronation Insurance. Let's talk about whole life insurance. Whole life insurance offers a combination of protection and savings. So 2 for the price of 1. At the inception, a portion of the premium is set aside for cash value accounts, so for cash value growth. So the policy helps you to build cash value over time and is growing at a guaranteed rate. Then you have dividend payments too. If it's a participating whole life policy, it may pay dividends. And this dividend can then be reinvested to further grow the policy that you have, to grow the policy cash value, or you can even use it in any other, you can take it out and use it in any other way. Then you can borrow against the cash value. So policyholders can borrow against the cash value of policy for personal use, for business needs, and it gives you liquidity. So instead of you borrowing money from family or from wherever, or from being unable to achieve what you have set out to do, then you can borrow against the cash value, which gives you liquidity and helps you to achieve your business objective. Then your endowment plan. Endowment plans have guaranteed payouts, they have bonus payments, and they are low risk savings, as in they are safe. Endowment plans guarantee a payout at the end of the policy term. Maybe the specified time is 10 years, 20 years. At the end of the term, there is a guaranteed payout for you. And it can be used for long-term financial goals. You can use it to fund education, you can use it to buy property, it's your money. So you can use it to do whatever you want. You can use it to start a business. You can plan it so that, okay, at so time, at so age, I want to start a business. So you plan it so that your time ends at that period, and then you collect your the payout, you get the payout, and then you start a business. Some insurance companies also offer bonuses on endowment policies, which increases the amount you get at maturity. Then I said this is low risk. So your savings grow steadily and offers you low risk saving strategy. So the volatility and the unpredictability of the environment, of the investment environment, which we talked earlier, we are protected from it. Now you have unit-linked insurance plans. We have the investment growth components, and then they have flexible withdrawals. Part of the money, part of the premium that you pay goes towards life insurance components, and the rest is invested in various funds. And it depends on your risk tolerance. You can actually even decide to invest in places like, okay, probably more higher risk. You know, the higher the risk sometimes, then the higher the return. So you can, if you know your risk appetite is high, then you can choose to get some higher returns by investing in some places. Then many unit-linked insurance plans allow partial withdrawals. Well, you have the initial lock-in period, but then after that, you can have withdrawals. So if you need liquidity, your unit-linked insurance plans could also come to the rescue. Then annuity plans for retirement. In fact, that is a favorite. Everybody now is talking about annuity. Everybody, all retirees. I have quite a number around me, and then it's all about annuity. Regular income streams, protection, it protects you against longevity risk. You see, retirees can now convert a lump sum into regular income payments so that they don't even miss the fact that they are not collecting the money monthly from their workplace, because they're able to get some regular payments as arranged by the annuitants. Then they have protection. You have protection against if live for as long as you want. It is not the kind of investment that if you overlive, if you live too old, if you get too old, then you outlive your benefits. The life expectancy rate in Nigeria is going to improve, is improving. So there's need for you to take care of yourself in old age. Annuity helps to protect against the risk of outliving your savings because it is planned. Then it has some tax benefits because it's tax deferred. That is, your money is there and it is not taxed. So whatever accrues from your money goes into your money, and it is growing. Your money is growing without any pullouts, any tax pullouts. So you don't start paying tax until you start spending the money. So it allows you to continue growing your money there. Then you have education plans, education insurance plans. Education is becoming more expensive. Even University of Lagos, that used to be non-paying fee, they have started charging money. Talk less of now private universities and private schools. Even secondary, primary school, we know, nursery school, we know how much we pay. So insurance, so parents now have the need, they have seen the need to start saving towards children's education. And the beautiful thing about education insurance plan is that it combines life insurance with the savings component too. You can tie your savings for education. Maybe you say, okay, in this number of years, I want to send my child abroad and I will need this money for the education of the child. So it ensures that you have a lump sum that is available for you to use when you need it, regardless of your age, of your health, of your situation at that time, whether you have been laid off at work or not, your lump sum is there for you to use. Then the maturity benefit. Upon maturity, then you get the payouts, which you can use. And then it's risk-free investments. Your savings accumulate at a fixed rate, making it a low-risk investment vehicle for education purposes. Then you have the group life. where you have the group life savings plan, and then the employee is protected, has life cover, as well as wealth groups. So the employee benefits from life cover, and then the savings is there. So it helps the employee to accumulate wealth at the same time being covered, having his life covered. Microinsurance solutions. Microinsurance are designed for people with low income. So when these people have low income, there is the tendency for them to feel that we don't have enough to save. But microinsurance helps them, apart from giving them the cover, it also has the saving components. So it offers protection as well as savings and investment opportunity. So it helps you to save for the future, allowing the policyholder to build some small funds over time. And then it gives them some financial discipline. Like I said, because you think your money is small, you feel like I don't have money, so what can I invest? But then microinsurance helps you to get some discipline towards cultivate the habit of savings little by little. You have health insurance with savings investments. You see, many a times we overlook the risk of this health insurance thing. You think it's just death. Being alive, having health challenges, and not having money to take care of the health challenges is sometimes worse than dying. So health insurance gives you it helps you to plan, to take care of your health needs, as well as invest while growing your investment over time. The accumulated savings can be used for the healthcare, and it can be used for other financial goals depending on what your policy says. One thing that I want us to note is that life insurance policies are tax deferred. That is, the savings or investment component grows on tax deferred basis. You don't pay any tax on the accumulated gains until you start withdrawing your funds. Where else can you get it that good? And even the death benefits, they are not subjected to income tax. They are not subject to tax. So you can pass on your money, you can pass on your wealth to your beneficiaries. It's a tax efficient way of passing on your wealth, of transferring your wealth to beneficiaries. If you look at this table that I have here, it's showing a view of the Human Development Index in some developed countries and some less developed countries. Look at, I've chosen to use the HDI because I just don't want to look at the economic index like GDP or any other index. And HDI will look at the social, the economic, the lives of the impact on the life of the people, because it looks at the standard of living of the people. It looks at the life expectancy from birth. It looks at what knowledge, how many years they spend in school, what do they study, the ability to have the freedom to study what you want to study. All these are put together in measuring the HDI. So if you look at the countries where they are highly involved, look at their market share. That is where they know the importance of insurance, where they are using insurance, where insurance is, they are highly involved in insurance. I look at the global market share. See United States, the global market share is 57.9. And the insurance penetration rate is 8%. You can see that they are high in HDI, which means that the quality of the life of the people is high. Look at other countries like China. Their market share is 10. Look at their penetration rates. And then look at the Human Development Index. It is 0.7. Other countries like France, Japan, United Kingdom, they too have high insurance market, global market share, and then they are a good penetration rate. And then their the HDI is impressionable. The nearer it is to 1, then the better it is. It measures how good it is. Look at Nigeria. Our global market share, global insurance market share is still 0.06. When we have a country that is 57.9, ours is still 0.06. And our penetration is still dancing around 1.2. See the HDI. So once the insurance penetration increases and people start making use of insurance, the Human Development Index is bound to increase. That is, our level of living is bound to be better. I look at Sierra Leone, look at Niger. The global market share is 0.03, 0.06, respectively. And then look at the penetration and then the attendant Human Development Index. So other countries, developed countries, have tried this. They have used insurance. They have embraced insurance. They have invested in insurance, and they are reaping the benefits of it. I think it's high time that we too recognize the use of insurance and embrace investment in insurance. Then my final thoughts. As awareness and financial literacy improve, insurance is bound to play even more significant role in wealth building strategies in Nigeria. Because naturally, human beings, customers, they will generally prefer the safe option of investing with a minimal level of risk, which insurance provides. There's no other investment opportunity that can boast that they can provide the minimal level of risk that insurance provides. Working with financial advisors and insurance brokers who understand local conditions and regulatory framework is crucial to maximizing the benefits of these products. Because even financial advisors, they now recommend a combination of the traditional investment and an insurance product for a more diversified approach to wealth management and then balancing risk, tax benefits, and then legacy growth. I have some smart investing quotes here. Insurance is not just an investment, but a prudent foundation for financial plan. You invest in your future while protecting your present. It is a win-win. You are investing in the future and you are protecting your present. While investment only helps you to grow your wealth, insurance helps you to grow your wealth. And while it is growing your wealth, it is also helping you to protect it. Thank you for listening.
Thank you so much, Prof. Thank you. It was really, really a very, very powerful presentation, and we really appreciate a lot of very important points you have shared, particularly informing us that insurance is primarily built to return the insured to the same financial position they were before any of us circumstances. It's important that we take advantage of what we can get through insurance solutions. Really, really impactful presentation. And there are a number of questions already, as you can see from the Q&A section, a number of questions, in particular about someone asked a question around the our adoption rate in Nigeria. But we'll take those questions at the end. We'll move over to the panel discussion right now, while we also try to pull up, but I would take the panel. I'll just introduce some members of the panel. We have already introduced Professor Folake. I introduced Segun Aremu, who is the Deputy Managing Director, Lancelot Funds and Portfolio Management Limited. Segun is a seasoned professional with over a decade of experience in the financial services sector. holding a bachelor's degree in banking and finance from Covenant University and an MBA from Obafemi Awolowo University. As Deputy Managing Director at Lancelot Funds and Portfolio Management, Segun leverages his expertise in investment management, capital markets, and asset management to lead teams in building effective financial infrastructures and managing substantive portfolios. Segun, good morning and welcome to this webinar.
Thank you, Vincent. Thank you so much. Thank you.
All right. I would quickly introduce our next panelist, who is also a product lead, Africa Branch International, Adane Anene. Adane is a visionary product leader with over a decade of experience in Africa's financial services industry. She's known for an innovative-driven approach, customer-centric solutions, and commitment to product excellence. Her career spans 12 years, transitioning from traditional banking roles to fintech leadership, where she has significantly influenced the African financial landscape. She's currently the product lead for Africa at Branch International Financial Services, where her strategic direction is integral to shaping digital financial services for millions across the continent. Adane's expertise bridges technical and business domains, exemplified by her leadership in launching branch banking products in Kenya, a project completed within 4 months, achieving one of Branch's top milestones in 2022. Good morning, Adane, and welcome to our webinar.
Thank you very much. Good morning, everybody.
All right, our final panelist for today, we have Oluwatosin Ajiniran. Tosin is the head Claims Life Coronation Life Assurance Limited. She's a seasoned life insurance professional with 15 years of experience in individual and group life insurance, risk management, and reinsurance. She began her career with Standard Alliance Life Assurance in 2009, where she worked across various technical operations departments, including reinsurance, client management, actuarial service, and claims. She rose to the team lead individual life claims in 2013 and gained expertise in managing life policy payouts and death claims. In 2015, she joined Coronation Life Assurance Limited as head of claims, overseeing claims related to group life, individual life, bank assurance, and investment-linked policies. Tosin holds a master's degree in risk management and insurance and a BSc in actuarial science from the University of Lagos. She's an associate of the Chartered Insurance Institute of Nigeria, and has also completed the Management Development Program at the prestigious Lagos Business School. Good morning, Tosin.
Good morning, Vincent. Good morning, everyone.
All right, thank you all our panelists for joining. We'll move straight to the panel discussion. We'll also be taking the questions that have been asked by the attendees. But before we just go ahead, we have a quick poll, which we pull up now just for people to answer. So the poll is up, so you can, for our attendees, you can begin to just answer the questions on the poll. It will also guide our discussions and help our panelists respond to you better. So we'll take our first question for Segun. Segun has, you have over a decade of experience in funds and portfolio management. And of course, you're an expert in this field, right? So how do you see insurance solutions fitting into a well-diversified investment portfolio? I mean, you've managed investment portfolio for a number of customers, and it'll be nice to see how insurance solutions would be able to fit into a well-diversified investment portfolio.
Thank you so much, Vincent. Thank you, everyone. Thank you, everyone, for the opportunity, and thank you, the management of Coronation Assurance and the group as well, and awesome work to the keynote speaker, and I also celebrate all the guest speakers as well on this call. All right, to start with that, let me say this. I began my career really in insurance, actually. I remember the time I started this insurance, was just a very brief stint I had in an insurance firm, and then we began this, what they call investment, savings, and insurance product together, bringing them together and all, and that was where I began to like the fact that that would drive inclusion, that would drive participation in the product as well. So for me, from what you have asked, it goes like this. Let me say a story, or give a scenario. You have Mr. A, he has 10 million naira. Mr. A is an investor. Mr. A put 2 million naira in investment, real estate investment. Mr. A even used 5 million to buy a car for Uber, making 7 million naira. And Mr. A also had begun to put the remaining balance of 3 million naira in an investment, in money market investment. Now, that is Mr. A's investment. He wants to get in money. All of a sudden, after 2 weeks, Mr. A's fund he put in the real estate, he had found that the land had issues and there was a contention and they were about to take it away from him. And fire got the land. Number 2, Mr. A's Uber car began to break down and an accident occurred. And Mr. A, number 3, the one in the house with the investment in money market remained safe. What happened is that if Mr. A is not covered for those investments that he has done, he would likely be in a deeper loss than he can ever imagine. Not even a mental loss as well. What I'm trying to say is that investment and insurance, they are harmonized in a way that it's not only about maximizing returns, it's also about managing your risk and managing them more appropriately, because you use insurance solutions to build a very resilient strategy for investment, and bringing them together will give you the best. And so that's why as you invest, make an investment, insurance now begins to play, say, I am giving you a security over what you are investing, such that even in terms of loss, you are indemnified appropriately. So you have 2 things involved. You have returns secured, you have your risk, or downside risk as well, secured as well. So insurance comes to play in managing these 2 things together. And in your portfolio, it is important that you have insurance in all your investments, because not only your for money market investment, also for real estate and alternative investment as well. It keeps you secure and it keeps you safe. But I'll tell you that you should be like Mr. B. Mr. B ensured that he had insurance for his land, insurance for his car, he had insurance for his investments as well. So what am I saying? What I'm saying is that there's always a place for insurance in your portfolio, and you have various products that will help you. And as an investor, you must understand, number 1, that you must build your investment needs in line with your investment horizon and risk tolerance as well. Insurance gives you the opportunity to be able to pick among several products on which one do you want to pick that would match your investment risk and also match your return objectives as well, and give you a balance for security. Thank you.
Thank you very much, Segun. Very, very, very well said. It's important to be like Mr. B and ensure that your investments, your investments are backed by insurance. We quickly move to Adane, because having understood the importance of insurance that Segun has just mentioned, as well as Professor Folake in her presentation. With your extensive experience, Adane, in both banking and fintech, I mean, you've transitioned from the banking industry down to fintech. Do you believe that traditional banking solutions are overshadowing the adoption of insurance-backed investments? I mean, in your view, what unique advantage do you think that insurance-based investments offer that will set them apart from conventional banking options? So a lot of people still do banking savings today. A lot of people still do a lot of banking banking-based investment. But do you think they overshadowed insurance-based investment? What advantages do you think insurance-based investment have over the regular banking investment?
Thank you, Vincent. Thank you, everybody, for attending. Thank you, Coronation Insurance, for inviting me to be part of this session. Well, I think that it's the relationship between banking and insurance investments is a bit more complex than saying that one overshadows the other. I think they exist as 2 separate entities. So the banking solutions are very, very well established, and people know about the banking solutions. Everywhere you turn, you see a bank or you see a banking product, and you're able to have access to it. While investment, on the other hand, is seen as maybe for the elite or maybe for those who have a lot of money to spare. And so I don't think the banking solutions are overshadowing in insurance solutions. However, I think that they can actually exist side by side and also collaborate to, just reach more people. In terms of the advantages that insurance-based products have over banking, I think that the biggest advantage is protection. And this is based market risk protection and even personal protection. So when you're investing, when you're doing an investment banked, an insurance-backed investment, for instance, you're protected from anything that happens in the market. So if market crashes or if anything happens, just like Sheng said earlier, if anything happens to your business, you're backed by insurance, and so you're safe. And then also for personal risk, say I have a life insurance or I have an annuity and I die or something, my next of kin and my family, they get an insurance payout, which they can use to help themselves, plan my burial or anything like that. And so there's a lot of protection when you have like insurance-based investments. Also, there's some tax benefits to having insurance-based benefits, and Prof mentioned it when she was, presenting earlier. Annuities, for instance, annuities are investments or insurance-backed investments where you pay a certain amount while you're working and while you're in active service, so that when you're not in active service or when you're retired, the insurance company then pays you over time, over a period of time. And so it's like you're earning when you're not working again. And so most annuities are tax deferred, which means that all you're earning on the annuity while you're investing in the annuity and you're in the active service, you're not charged. There's no tax on it. And so it can keep accumulating until when it's time for payout. Unlike ordinary bank savings where you have to pay withholding tax, you have to pay all those type of tax. And so those are some of the advantages of insurance-backed investment. But I think that one of the biggest advantages, which I think that insurance-backed investments has for individuals, is for legacy planning. So if you're planning to leave some money for your children or for your grandchildren, or if you have a lot of wealth and you want to pass it on to the next generation, it's easier to keep that or to invest that with an insurance-backed investment, because at payouts there's some tax benefits. There's not a lot of paperwork and appropriate things to do for your next of kin to access it. So for wealth protection against market risk, for protection against personal risk, and also for keeping legacy for your, I think insurance-backed investments have those advantages. Thank you.
Thank you so much, Adani. Very well put together. You talked about legacy and how insurance-based investment solutions can help in terms of legacy planning. We'll quickly move to Oluwatosin. I mean, based on these points about how people can leverage insurance to accumulate wealth, I think that most of our attendees are looking for us to even get deep into the meat of the matter. So Tosin, I'm going to ask you straight up, right? There are a range of insurance-backed investment solutions available that can support wealth accumulation. Adane mentioned annuities. Professor Folake during her keynote presentation also talked about annuities and all that. And we know that there are a number of them. So could you provide an overview of these options, right? And what are their unique advantages so that our users who are even starters in insurance and starters in investment can understand what Coronation Life Assurance products can help with their investment journey? What can they use? What kind of tools can they use for long-term wealth accumulation, Tosin?
Thank you, Vincent. And all has been said by other keynote speakers, and the keynote speaker, the professor. At Coronation Life Assurance Limited, we have quite many policies that people out there, Nigerians, can take in order to have to fit into their financial goals. We have short-term plans for short-term goals. as well as the long-term goals as well. Also, looking at long-term goals, just mentioned, you might be looking at getting some cash value, getting some money, or planning for yourself in the future in order for you to be to make sure that, okay, at that point in time, your financial needs are being taken care of. So we had quite many of them, ranging from the retirement policies. We have our annuities, we have short-term plans, we have our long-term plans as well. And looking at, we also have our term assurance, which gives protection in case of any eventualities, because we live in the world of risk. At every point in time, the unforeseen can happen, and what you don't even plan for, it can happen at any point in time. And also, you look at your beneficiaries, you want to like, okay, let me plan for them in case anything happens and I'm no longer there for them. I want to be sure that, okay, they will be rest assured that they will be taken care of when I'm no longer there. These are the things that insurance solutions offer, and these are the things that the policies that we have at Coronation, they give to customers, they give comfort to customers, they give peace of mind. For example, we have our term assurance. These are policies that protects you against any financial loss in the event of death. If there's death, it prevents you, your loved one, to suffer any financial, probably any financial setbacks, or maybe how to take care of themselves. So there's specific sum assured that you look at when it's a term assurance. It's for a specific period of time, and you have the period that you want to run this, and the target amounts which you are looking at. In case there's any eventualities, probably there's death. You know that you are leaving something for your legacy. You are leaving something for your estate. And also, this term assurance that we are talking about at Coronation, we have other additional add-ons like that you can extend the cover. For example, probably you want it to cover critical illness. You don't pray for any illness that is so serious to happen to you, but it will happen at any point in time. You could look for a way of taking care of your medical expense. All this can be included in the term insurance. And accidents could occur, and there could be permanent disability. This can also be included in it. And if any of these circumstances that I've mentioned happened, you know that you are rest assured that insurance is there to take care of all this. And we have other policies such as whole life that the professor mentioned. Whole life has elements of savings and at the same time the protection. So it gives you the comfort of the savings aspect gives you the comfort of having a cash value accumulated over a period of time. And this you can make some partial withdrawal from this accumulated value. You can use it as a source of probably for other, divert it to other investments to quickly do when you have accumulated fund for some time. And also you are even being covered for the protection aspect throughout the period that the premium have been paid. And if anything happens, maybe after you have passed on, you know that there's a death benefit in form of the sum assured, a lump sum amount that is being paid to your estates. Also, we have under the endowment, we have some legacy policies that you can save towards them, and they have protection as well. And there's for our legacy policies, for endowment policies, we have partial maturity. What do I mean by this? For example, if you have signed on for a policy for an endowment policy of 6 years, there's partial maturity for like 2 years. After the first 2 years, you can get a partial maturity. So this fund can be used and can be diverted to other investments, so to speak. And whatever that is paid can also be used for business planning as well. Then you have the next 2 years to get another partial maturity, and the final with the interest is paid at the end. But eventually, if anything happens, probably there is death, then your beneficiaries, they are secured. financially because their sum assured will be paid out. And also looking at our education plan, we have fantastic and robust education plan at Coronation Life Assurance Limited. This is just to give protection and to do savings as well. You might have a child, for example, but probably in a primary school, and you are looking at making plan for the next 5-10 years, where probably when the child will be completing the secondary school and be moving to higher institution, you can contribute money towards this, and you are rest assured that at every point in time, there's you have an investment in place with an insurance company that will help you to cater for the education expenses on your children. And peradventure, if there's debt, this will not stop your purpose, your goal from being achieved, in the sense that there is a lump sum that will be waiting in the form of sum assured, and whatever you might have paid in the past, this will also be taken care of as well, in form of having the total payouts in form of investment, as well as the sum assured to take care of the children in case there is debt. And also, like I mentioned, retirement. We have short-term retirement, we have long-term retirement. You are still in a paid employment, or you have your business running. You can set aside your retirement plan for yourself. You don't have to wait until that time before you do this. So this is going to help you to augment your plan that you might have. And also you have retirement, we have annuity as well. We have deferred annuity, we have immediate annuity. Deferred annuity helps you to contribute while you are still in service or while you are still in business, and whatever you are able to put together, you can convert it to a retiree annuity, where a lump sum is used to get to buy the annuity product, where you have a regular income even when you are not working again.
Thank you so much, Tosin. Thank you for putting everything together and trying to explain to our viewers about the products that they can leverage to accumulate wealth the smart way. I keep saying that it's 2024 and we need to live smartly. There is every need to live smartly, especially because of the challenges of the times that we are in at the moment. We'll just take a few more questions. We have a lot of questions from our viewers and our listeners who really want to understand. I see a lot of questions around the inflation and how insurance can help them hedge investment in this inflation. We'll come to that, right? Just before then, let's talk to Professor Folake about the risk factors. We'll just come back a little. Everyone has talked about the need for investment. In her presentation, she talked about the need for money. That was one of the first things she talked about. In today's world, there is need for money. You need to buy petrol, you need to pay school fees, you need to feed, you need to survive. So there is need for money. But in the quest for money, there are risk factors that investors often overlook when considering investment. So, Prof, based on your experience, in the insurance business and in the academia, what are the risk factors that you think investors often overlook? We may have investors on this call. What risk factors do you think they overlook? They just jump into an investment they find. And how can insurance-based options mitigate against this risk? Because we are here talking about people switching to insurance-based investment so that because of the volatility of the market, the world that we are today, not every investment is authentic, right? So what are the risk factors that you think investors overlook, and how can insurance-based options mitigate against this risk? Prof, please.
Thank you very much. So I would mention some risk factors. Because what happens is that many a times the investors are just focused on the premiums, on the returns rather. They are focused on the returns and they don't look at the risk. So yes, there are risk factors which may not have been noticed. One will be the market volatility risk, like you mentioned. The market volatility. Investors, like I said, they focus on returns, but they underestimate how market volatility, particularly some large losses, can negatively impact investment. Market volatility can impact investment in the short run. It can impact investment negatively in the long run. In fact, significant downturns can take years to recover or may never. People have been known to die. Look at the 1929 Wall Street crash, the 2008 global financial crisis, and the very recent, the Cyprus banking crisis. So it could have some very serious effects. So how can insurance mitigate this? You know, our work is mitigation. That is what insurance does. At the heart of insurance is mitigating risk. We have products. The insurance products, they are not, the risk mitigation has been built into insurance products. So we have products like the variable annuity or the universal life policies that have the options of minimum guarantee, that there is a minimum that you can't lose. You can't lose. There's a minimum guarantee. And your principal is protected. So it protects the principal. Even when the market declines, the principal amount is still protected. And then you have some fixed index annuity, I was say. Some fixed index annuity that allow participation in some market gains. Talk about inflation risk. Over time, inflation may erode your purchasing power. So they cannot buy anything in the market again. Fixed income, cash savings, they're all affected. They could not be affected by inflation. But we have some insurance products such as the inflation adjusted annuity, which offer payments that rise with inflation. So it rises with inflation, so it helps to preserve your purchasing power. And in fact, we have other products like the indexed universal life products that can provide cash value. It provides cash value growth that is tied in the working of that policy. There's a cash value growth that is tied to market index, so it outpaces inflation. Then you have the liquidity risk. Some investors find themselves needing cash unexpectedly. There are times you think you have it all tied. You have it all tied up, but then you just find out that there's a leaking end, and then you need some liquid. You need to be liquid, and you are tied up in some illiquid assets. But insurance, it has life insurance policies has some cash value components, e.g., whole life or universal life now. They can provide liquidity through loans or withdrawals. Longevity risk. That is, when you save and you live beyond your savings. In insurance, you practically push that to the insured, to your insurance person, because they have planned, they have realized that you must not live beyond your savings. You must not, your life must outlive your savings. So your policy is so planned that you don't die before your savings are expired. Then we have the taxation, and then the estate planning risk. No, I talked about tax deferred. So it's generally when you invest in insurance, unlike what you find in other places, you find that you have tax benefits. You have several tax benefits. Even death benefits are not taxed when it is passed down to your generation.
All right.
Yeah, so I think I'll stop there.
Thank you so much, Professor Falake. Really, really nice points that you have raised. A lot of these risks are overlooked by investors, and I mean, you won't blame them, which is why we're organizing webinars such as this to help people get the relevant knowledge, because most of the time the case is a lack of knowledge. A lot of people just want to get into investment that provide the highest returns without minding the different kind of risks that can happen. We'll move quickly. I would appreciate if panelists can keep the next set of answers within a minute, because we have a lot of questions that we intend to take, right? So I'll go to Shegun quickly. Now we are talking about economic uncertainty. In fact, I said in times of economic uncertainty, but we are where we are right now, particularly with market volatility due to issues like exchange rates, inflation, global cost increase, and the likes. Now, just very quickly, how can investors leverage insurance solutions to bring greater stability to their portfolios? We talked about, you had originally talked about how insurance solutions are very important in keeping your portfolio. Now, my name is John, for instance. John wants to do stock, mutual funds, bonds, and the likes. Now, market stability, inflation, and the likes affecting the market. How can he use insurance-based solutions? Are there insurance-based solutions that would be preferable, right? How can he use them to create some form of stability to their own portfolios?
All right, thank you so much, Vincent, for that amazing question. So number one, let me start by saying this for everyone on this call, that it's very important to note that money in your hands must first meet a plan in your head for it to last in your hands. I'll come again. Money in your hands must first meet a plan in your head for it to last in your hand. And what will make it last a lot more is that you have a guarantee of an insurance-linked investment, because insurance gives you this two-pronged benefit, such that you can get in returns and you can also get safety as well. And for me, for what you have asked as your question, there is one product that you can benefit in insurance, that you can use this, what you have said, but that will help you to hedge against this inflation, against this risk and all the likes. Just simple, the unit-linked insurance product gives you that benefit to have both insurance and also a unitized investment that gives you such returns. And such unitized investment it's like a mutual fund, right? That gives you proper return and dividends actually as well. And they invest in different investment class. And again, you must understand at the back of your mind the basic finance principle that says that the higher the risk, the higher the return. So you must put that in perspective. Because if you want more, but the problem is that in Nigeria, our climate, our investors don't like plenty risk, but they want more return. The truth is that you have to be prepared to take more risk. You want more returns. So for me, I would advise to use the unitized insurance-linked product, and that would be very, very nice. Or you can also go for the endowment, which is very good. Thank you.
Thank you so much. Thank you so much, Segun. Very, very sharp and very quick response. And I liked the response there. Money in your hand must first meet a plan in your head for the money to last longer in your hand. So very, very nice quote there. Would attribute that to Segun 2024. Thank you very much. All right, we'll move straight to Adane, right? Just another quick question, and I appreciate a very quick response to it too. Now, you have expertise in designing customer-centric financial solutions. You've had, a very, very splendid career doing that. How do you see the accessibility of insurance-backed investment products improving in the coming years? Now, today, only 1% of Nigerians currently have life insurance. And life insurance is the most popular adopted insurance solution today, right? Because of the government regulations, everybody needs to have employers and all that. Yet, 1 in 200,000 Nigerians have an insurance solution. Even from the poll we conducted on this call today, we have seen that 53% of our attendees do not have insurance solutions. They don't own any insurance policy, but they are considering, right? Another around 20% have not even considered it. They don't have, right? So with your expertise in developing customer-centric solutions, how do you think we can improve our solutions to drive further adoption in the coming years? Also, you could just add to that, do you think there could be some form of partnership between fintechs and insurance companies to drive insurance-backed investment? Because today, if you're not using fintech, for particularly the retail market, they just go fintech, right? The more advanced market would rather go maybe fund managers and the likes. Do you think there could be some form of partnership with insurance companies that will lead to more adoption? Adani.
Thank you, Vincent. That's a very great question. So for my experience and from what I do, I see 1% and I see opportunity, because if there's 1% penetration, that means that there's 99% opportunity and markets to be tapped. And I think, yes, that investment in insurance-backed investments can actually improve and grow from 1% to as much as they want to grow, as much as they're able to grow. However, there are a couple of things that need to happen before those growth happen. The fintechs didn't start today and become successful immediately. There were some things that they needed to do and put in place and work towards before they could gain the kind of popularity and market that they've gained today. One thing that I think is lacking, or one thing that I think could be done more, is awareness and education on how important in insurance insurance-backed investments are. Something like this, this session that we're having today, making it available for people to understand how exactly this investments work and how they impact their lives. And I hear people say investment is like, I never chop, I won't invest, I won't do insurance. So letting people know that it's not about today, it's about tomorrow, it's about your children, it's about what you want to leave behind, it's about how you want to live when you've retired, and bringing all the advantages of insurance to to the forefront and letting people know that you can get tax advantages, you can actually borrow on the back of these investments and all, just creating that awareness and educating people on how it works. That's one. And then two is, just going digital. I know going digital, I know it's a buzzword, just go digital transformation, blah, blah, blah. But it really works with the proliferation of mobile phones. Everybody, every Tom, Dick, and Harry has a mobile phone now. Bringing your products down to a mobile phone and, building an app, a web platform where users can just see and be able to access and complete their onboarding and, their transactions seamlessly. That, could change stuff instead of, just still going the traditional way. So digital distribution channels is very important. Another thing is microinsurance and low cost offerings. Yeah, we live in Nigeria. We know what's happening in Nigeria. We know the economic situation. And so bringing these products down to the people you want to appeal to, the people you want to attract is very important. We have to face reality that not a lot of Nigerians earn, consistently, monthly, daily. So a lot of people earn, their earning power is flexible. And so we have to make our products that we sell to them also flexible. So, paying insurance premium, it doesn't have to be so rigid. People can do pay as you go, people can pay when they have, just bringing it down to the level of the people that we want to sell to is really important. And then for the other question you asked, where you asked if there could be a situation to, maybe work with fintechs, with fintechs and insurance companies to make insurance products more available. Absolutely. I think, yes. Embedded insurance solutions is very important for people who don't have access to an insurance company, or they don't really know how it works. Having a partnership with a fintech, which is very popular, to kind of embed some level or some types of insurance products in the product they're already offering the users. Let's say, for instance, Branch we have an investment product where we offer users returns for their investment. Partner with a company like Branch to also put a life assurance behind that investment product will work to create the awareness of how insurance works with that whole market that Branch already covers. So yes, there is absolutely room to just make a good working together, collaboration between fintechs and insurance. This would actually bring the ease and the flexibility that fintechs have with the protection that insurance has, and it's going to be, it's totally possible. Thank you.
Thank you so much, Adani. Very, very well put together response. I think you on that partnership offer. We would, of course, we'll come back to you on that. I mean, very, very nice point, right? Pay as you go insurance premiums and all. Coronation Insurance and Coronation Life Assurance currently offers that plan, which is spot on. We also talked about being able to buy insurance policies on your mobile phone, web platforms, and the likes. We also currently offer that. So, in line with market realities, in line with the trends of the time, the goal is to make insurance as accessible as possible to everybody, right? But we just need to, as you have said, continuous communication and education of the importance of insurance solutions. I'll take one question quickly to Tosin. a lot of people have spoken about the tax benefit for insurance. In fact, it will interest you to know that from the poll that we have conducted today, only 2% of the attendees on this call look out for tax benefits when making their investment plans. A lot of people are looking at growth potential, right? So do you think, first of all, that tax benefits on investments is often overlooked, all right, as we have seen here? And also, could you elaborate on how Coronation's solution can be utilized as effective tools for tax planning in line with wealth preservation? So while you're preserving wealth with our solutions, could you also elaborate on, what Coronation solutions can be used to better plan tax, can achieve tax benefits, and then preserve wealth? We appreciate if you can do that very, very quickly, please.
Yes, okay. Insurance-backed investment products serve as a tax-efficient mechanism, but unfortunately, a lot of people out there do not know this. Life insurance products, they have the tax-free benefits. And what do I mean by this? When you have money that, for example, you have an investment and you have a sum assured that you have bought, that you are looking at, and you are contributing money. At every point in time that you make contribution, if we have protection aspects and there's risk premium that is being taken out that you're paying for, the risk element is what is giving you that protection that you are buying. If you're in a paid job, for example, you can use this as a tax rebate in your company. Most of people out there, they don't know this. You can actually request for this from Coronation on your product, on your plan that you have, and you take it to your company. We give you what we call tax rebates. And whatever tax you are paying in your company will get reduced. Also, looking at benefits that you get from life insurance business, whenever there is a cash value, probably at maturity, you have been able to accumulate fund. When this fund is being paid to you, it is tax-free. It is tax-free, and this means you have more money that you can play around with, that you can even divert to other investments, that you can even use to run your business plan. And also, when we look at the protection side, and there is death, for example, of the policyholder, and there is a lump sum in form of the sum assured, the amount, huge amount that is going to the beneficiary, this is also tax-free. It's not taxable. So this gives an opportunity for the money to come to be intact. So whatever insurance solution you have, and whatever sum assured you might have taken for yourself, and you are contributing towards that goal, you know that this is going to be tax-free policy for me. And I'm not going to be taxed in a way that is going to make the money to be short or to devalue the money. And also, like I said earlier, this can also be used as tax rebate. Even the annuity plans that we have at Coronation, it is tax-free also. And some of our risk products as well.
Thank you so much, Tosi. Really, really nice. As you have said, we have a number of solutions that can help people preserve wealth, plan your tax life very well. And you can reach out to us after this webinar. We would eventually we can do a free consultation with you to just help you discuss your investment plan proper. One very important question I have for Segun, just before we go into the Q&A and see other questions. One common challenge in Nigeria today, Segun, is the delay that, I'll say families, for instance, families, but most likely beneficiaries rather, face in claiming the investments of their loved one. Most times this is due to extensive paperwork or prolonged processes, and sometimes it leads to forfeitures, right? Especially if you don't have a family that is very savvy with these things, or have some idea that, oh, their loved one left behind some form of investment. So where does insurance come to play in this? How can insurance-backed investment solutions help to streamline these processes and ensure smooth asset transfer to beneficiaries? Because just as Adane said in her last answer, the view of investment in Nigeria is, I never chop, I want to invest, right? People would say, yeah, they don't, I mean, you get, now who chop, they invest.
Yeah.
That's the view we have today. In fact, of late, another view we're having now is next of kin will be all right. Let me take care of myself.
They will spend your money.
Exactly. So, and this is largely because most times people cannot even access the investment of their loved one. In terms of unforeseen circumstances, maybe the person hospitalized, is bedridden, cannot speak, or the person has passed. So how do you think insurance-based solution can help here, so that our attendees listening can begin to reconsider their stance around insurance-based investments?
All right, thank you so much. Again, I want to celebrate what you are doing in Coronation. I love what you are doing, and it's a good one. Please keep it up. Let me say this, that insurance in Nigeria has evolved. And where we are right now, we're in the best place. The only thing that we need to do more is literacy and inclusion, and bringing it down to people on the street to know what we are doing more. So now, insurance works like a semi-trust product, meaning that for insurance, in fact, it's now even so beneficial and wide, such that you have like this whole life policy, endowment policy, where you still have sum assured gotten to your beneficiaries, even while you are earning income on it at the same time. So what I'm saying is that you have a balance of both insurance and wealth transfer seamless. Why is it like this? Number one, when you are filling an insurance form, you have a place for beneficiary and next of kin. That is easy. When you have eventuality, your funds also devolves to your next of kin without going through probate, wills, and all. It's so easy and it's simplified. All you just need to do is to give a claim, your claim form, and it's a a simplified claim process. The person that died, death certificate, ID verification, basically, that's all. And your name is on next of kin, everything is seamless. And you don't have to go to probate, and probate takes a lot of time. So with insurance, the sum assured goes to your next of kin so easily. Your whole life policy gives you this, your endowment policy gives you this, and most insurance product also gives you this. It's an hybrid of the both products, and that's why every time I tell investors, always do a good portfolio allocation, but much more, ensure that your portfolio also is an insurance product like this, so that you can cover your family as much as possible. So as it works like a semi-trust product, you are covered on all ends, and it is very seamless. Your wealth transfer is seamless because you want to outlive a generation, you want to make an impact with those coming behind you, and leave a legacy that will outlive you. Thank you.
Thank you very much. Tosin, I see your hands up. And so just before I get to you, very, very nice points, Segun. You've talked about the benefits of insurance-backed investment, which basically you have your sum assured and you are also able to transfer wealth. It is, I mean, for lack of better word, just as most of our skilled guys will say, it is fantabulous because you have, it's like a 2-in-1, like it's a win-win for you. Right. So people need to take advantage of insurance-backed investment, education, trust. It is not about today. It's not about you. It's about the legacy you're leaving behind, the people you're leaving behind, about tomorrow, because anything can really happen today. So Tosin, please, quickly.
A quick one, in addition to what Segun has said. So an insurance company, in order for beneficiaries to get access to whatever benefit they have, probably after the death of their loved ones, an insurance company should have a robust application in place. For example, Life Assurance Limited, we have digital claims where the customer can log in. It's friendly, it's robust. Customer can log in and they can lodge their claims. And the beautiful thing is the tracking of their claims lodgement up to the point of when this is paid. And this is as soon as documents are completed, we do this within maximum of 48 hours. So in a way, for customers, for beneficiaries to be comfortable and to have access to their benefits, there should be a robust and a user-friendly application in place, just like what we have at Coronation Life Assurance Limited. That's what I have to add, what Shegun said. Thank you.
Thank you so much. Thank you so much, Tosin. You've heard it very well, the audience. At Coronation Life Assurance, you have these solutions, the digital claim portal where you can make your claims immediately and you can get a response like really, really fast. It's really important that you take advantage of even insurance solutions that are digitally driven. Like Adani said, being digital is not just for the sake of it. It's actually being able to have tools that people can use easily. Now, we'll just quickly take some of the questions that we have on the Q&A session. I'd like to say thank you to Adebowale, our MD, who is answering most of them so that we can save time. So we'll just take some of the questions that have not been answered. Question about the slides. Yes, the slides will be sent to you. Questions about brochure of insurance policies. Of course, they can be sent to you. There's a question that says, embedded insurance seems to encourage more people to buy insurance products alongside goods or services. So what partnership does Coronation Assurance have with companies that sell shares to the public to ensure prospective shareholders can seamlessly buy shares alongside insurance policy? Tosin, do you want to just take a shot around partnerships for Coronation Insurance, particularly Coronation Life Insurance, in terms of investment? Tosin, if you can hear me, okay.
Yes, I can hear you. Okay, so for the investment product, okay, at the Coronation Group, have other entities, other partners that are into shares, and our products are sold across the entities, and our customers out there, they have access to all our, regardless of the entities or regardless of the type of products that they may require at any point in time. So yes, we have our investments from the insurance space, as well as we have our Coronation registrar that are into all our shares, and yes, that are into shares that we have within the Coronation entity.
Thank you very much, Tosin. Thank you. Another question. This can, I mean, Shegun, you can take a stab at this. It talks about insurance should be braced up with returns on investment. Inflation rates should be factored into returns to investors, or else insurance will remain as risk cover. Shegun, this question talks about being able to match inflation rates. Factor in inflation rates in investments for insurance companies. What do you think about this? Because this person says inflation rate is not like that of developed countries where insurance is highly patronized. So how do you think in Nigeria today, with what we are facing, how do you think we can factor in inflation rate into the returns on insurance-based investments?
All right, so let me start by saying this. Honest opinion, every investment in Nigeria at the moment that is safe, secured, and without very low risk, they are all at negative real returns. And I will not like to hear about that. Even we have inflation about 32%. Most, even CPs, as high as CPs are, contract papers, right now, they're about 30%, 81% yield. Not even the rate as the way, not the yield. To tell you that at the moment, it's better that you just get something than nothing. But then you have investment that will give you better returns over inflation, but they are quite highly risky. But the way insurance is designed to keep you safe. And that is why NICOM regulates insurance activities and look at, okay, where do you put funds and all. But in all this space, insurance has now created a specific product that can help you to tap into upward trending returns that gives you good returns as well. But also, the risk is also there, even though it is managed by portfolio managers that are well learned. And this is where you have the unit-linked insurance products, which are unitized. So some of those products are invested in either equities, some they are in bonds. So they have different asset classes that they are investing those funds in. that would always give you good returns above inflation. For example, last year, equity investment, I'm also a stockbroker as well. Equity investment last year, the year-to-date returns was about 40%. That is way above inflation. But how many people can sit down to take that risk? But insurance can do such through that unitized-linked product. You invest in such, it's well managed. At the end of the year, you're going with such a return, even after they've taken their own fees as well. So what you can do at the moment is to ensure that you patronize those unit-linked investments. But just note this, that insurance is designed for safety. Hence, you have to structure your portfolio allocation appropriately. Thank you.
All right, thank you very much, Shegun, for that very important question. So I'll take this question, just one last question. So Tosin, you can take a shot at this. It talks about how we intend to give confidence to investors. It says, how could your company assure one to have confidence in insurance policy that fades away with unstable economy in Nigeria? Now, which tends to loss at expiration of the policy. So the person referenced a particular insurance company that went bankrupt and failed to fulfill policies till now. And says even if the policy is to be paid, the value is eroded due to unpredictable inflation. So how do you boost investor confidence in Nigeria, where investors also believe that unstable economic policies can lead to the loss of a company? So what's your take on that, Tosin? So particularly, I mean, in reference to Coronation Life Assurance.
Insurance, yes, exactly. So for the Coronation Life Assurance, we have some products in place that customers can ensure that they have some contribution or some investments in such a way that it can help them in their business plan. That is why it is good and it's advisable that you embrace assets going on for you. Even when you have companies, you have different kind of assets, you've diversified your assets into different channels. Just have an insurance in place, because insurance, one thing is, it serves as a backup for you as an individual. When the chips are down, when you have, for example, the scenario we just painted here, and you have your company being bankrupt, and you can always fall back on the policy that you have, a plan that you have with an insurance company. You can always fall back on that, and whatever cash you have been able to put together, you can always start something from there.
All right, thank you very much. Thank you very much, Tosin. I mean, there are other questions that have also been asked and answered. Someone asked a question around insurance for. Okay, so just before I go ahead, I think Adebowale would like to add to that. So Debo, please, over to you.
Yes, thank you, Vincent, and I thank the person that asked that question. So I mean, the questions around investor confidence in the business. And I'll say to you that any insurance company or any financial institution, so what I want to look at for is a corporate governance around the people running this business. What group they belong to? What does their capital look like? What are the financial ratios look like, right? And you continue to monitor that over time. What I can assure you of is that as a business, we take governance extremely seriously. If you look at our financial ratios in terms of how we perform over time, you realize that we are one of the strongest brands in the insurance business in Nigeria as of today. So again, these are some of the things that when you're dealing with companies, you must look out for. Yes, there have been companies that have failed over time, but one of the things you also need to be mindful of is that the signs were all there for serving investors and for customers that were dealing with them. The signs were all there. So I think as someone buying insurance, these are some of the things you need to look out for every time you're dealing with an insurance company. I also like to mention to you that the insurance industry itself has a very strong regulator called NICOM. And of course, things have changed over time. NICOM has also aligned with best and global and best practices in terms of supervising insurance business in Nigeria. So you can be assured that in terms of securing the industry and in terms of ensuring that players within the industry act professionally, NICOM is there to actually ensure all of that. So I hope I've answered a question to that to the person I asked that question in more details. Thank you.
Thank you very much, Debo. There are a number of questions around government policies, and I see the response already. NICOM is a very strong regulator for, and insurance companies are regulated. Coronation Insurance and Coronation Life Assurance Limited particularly are very compliant with NICOM regulations, and you can always check us to see that we are always doing the right thing. We have come to the end of this webinar. It's been a very long day, but very insightful. I mean, very, very insightful presentations from our panelists, our keynote speaker. And the questions are unending, and we'll try to even put these questions together and send to attendees along with the webinar slides, the replay, and other of our documents we'll be sending after the webinar. Would like to invite our head of life underwriting at Coronation Life Assurance Limited, Kenneth Esu, to give us the closing remarks. Kenneth, please. Okay, well, I think Kenneth is having some connection issues, but on behalf of Coronation, I'd like to say thank you to everyone who has joined this webinar today. Thank you to Shegun, thank you to Adane, thank you to Professor Folake for staying, and Professor Folake had to step out due to some other engagements, but we thank her for even finding the time to join us today and for that wonderful keynote presentation. Thank you also to Tosin for your very wonderful responses, and to Adebowale, our MD, for being here with us throughout this period and also responding to the answers by himself. Thank you very much. And to our attendees who have taken time to attend this session, who have taken time to be with us from the start till the end, we say thank you. And we hope that we've been able to share reasons with you why you should begin to consider or educate you more in considering insurance-based investment products. Just as I said at the beginning of this webinar, it's 2024 and a lot is happening around the world, not only in Nigeria, and it's important to live smartly. It's important to ensure that you're making smart decisions. And as we do that, if you need further consultation, feel free to send us an email, respond to the email that will be at the end of our, at the email that we'll send to you. You can also respond to the emails on your screen and the phone numbers on your screen. You can reach us for more information on our offerings. We are always willing to listen to you. We can have a free consultation to help you walk you through your investment plan. What do you want to do, right? We are able to listen to you. Also for partnerships that, just like Adani has mentioned, for those who are listening on the call who are interested in partnership, we're also willing to listen to you. Some of our products include the Education Legacy Plan, Coronation Legacy Plan, Credit Life Insurance, Rest Easy Light Plan, and Retiree Life Annuity. A lot of people ask questions around plans for 65-year-old, plans for our parents in the case where they pass on. That's where you see the Rest Easy plan. So you don't have to, they don't have to disturb you for burial expenses for aged parents and the likes. There's Retiree Life Annuity for people who are relying on their pensions and want pensions for every month for as long as they are alive. There's the annuity plan for them. There's a Credit Life Assurance, which partners can even come in to ensure that even when you loan people, they don't lose, you don't lose your money in terms of any unforeseen circumstances. And of course, the Education Legacy Plan for parents who are on this call, potential parents also who can also take up the Education Legacy Plan, and a lot more insurance products, as you can see in the Q&A session that we have answered. That yes, we can even hedge against FX. We can do a lot more insurance products. You just need to talk to us and we'll be there for you. Just a quick announcement before we close. It's just to announce again our Insure and Win promo. A lot of people must have seen that, but just in case you have not heard of us, we'll pull it up on the screen shortly. The Coronation Insure and Win promo is currently ongoing. All you need to do is to buy at least one insurance product, and you would be eligible to win a lot of prizes worth 30 million naira. So we have the grand prize of a 2023 brand new Kia Rio, and we also have generators, fridges, microwave ovens, and the likes, vouchers, and a whole lot. All you need to do is to buy an insurance product or a life assurance product with as low as 2,500 naira, 5,000 naira, different kind of products. The more the more products you buy, the higher your chances, of course, of winning any of the grand prizes. So feel free to purchase any of our products. And as you do that, we'll contact you. We'll have live draws where people will be invited, and of course, they can win prizes. So once again, thank you for joining us today. Thank you on behalf of Coronation, and we hope to see you at our next webinar. Thank you.
Thank you, everyone, for being part of today's session. It's been a very insightful time, and I hope you found the session, the discussion as valuable as we have intended. At Coronation Life Assurance, we're dedicated to helping our clients unlock the full potential of insurance as part of a smart investment strategy. Today, we've seen how insurance products can do more than protect. They can support meaningful wealth accumulation and financial resilience. As you reflect on today's insights that have been shared, I encourage you to think about these strategies and how it might fit into your own financial journey or those of your client. Remember, building wealth is not a marathon. It's a marathon, it's not a sprint. And the choices you make today set the foundation for long-term security and growth. Thank you once again to our esteemed speakers for sharing their expertise and experience with us. And thank you, each of you, for taking the time to join us and engage in this conversation. Please do not hesitate to reach out to each of us at Coronation Life. We are here to support your financial goals. We are here to help you every step of the way. We look forward to see you at our next session. Do have a great day. Thank you.
All right, thank you, everyone, and enjoy the rest of your day. Bye.